Welcome back. You're still watching Tomorrow's Trades right here on ED Now. Darius Kovalchik, who's a senior economist and strategist, Asia ex-Japan of Credit Agricole, joins us on the show right now from Hong Kong. Darius, thanks very much for speaking with us. First up, this week inflation slipped a bit in India. Could it be a sign of cool-off, or is it just a temporary relief, you think?
It's difficult to make a call at this point because, yes, we did see some decline in inflation. It's partly because the economy has slowed. But at the same time, going forward, there is a big risk of an increase in food prices because of weak monsoon. So the weaker demand growth in the economy is pushing price levels down, but the higher commodity prices are acting in the opposite direction. And we still have to see which force will be stronger. I think that in the very short term, the downward pressure will prevail. We will see a little bit of declines in inflation, but it will remain volatile and pretty elevated. It will be difficult to significantly cut interest rates with the kind of inflation outlook that India is facing.
The cup is overflowing when it comes to domestic problems that India has to grapple with: the deficit monsoons, rising interest rates, high inflation, policy paralysis. Which of these would remain the biggest concern as viewed by global fund managers?
Global investors are concerned about a number of developments in India. First, the macroeconomic fundamentals. You still have significant twin deficits, current account and fiscal, and this is putting downward pressure on the currency. At the same time, you have high inflation and lower growth that people are used to. In the past, we had very high growth in India, so those imbalances in the economy were kind of overlooked because people were hoping to benefit from the fast expansion. But now that the growth is slower, the focus is on the weaker fundamentals. And at the same time, it doesn't seem that there is a strong policy push to deal with those underlying problems. And investors are concerned about that as well. So a lot of worries, and as a result, we are seeing this continued weak levels of the currency because there is just not enough confidence at this point in a quick turnaround in the Indian story.
Of late, India has seen a slew of GDP downgrades by foreign brokerages. Do you think 6% GDP target is going to be tricky for the Indian government?
Well, the government's target is much higher. I think 6% is very achievable. We are going to get another quarter of weak growth. The second quarter of this calendar year was probably below 6%, but I anticipate that the economy will gradually accelerate, and 6% should be achievable. But remember that by historical standards, it's not the kind of growth rate at which India would like to and could grow if their fundamentals were aligned with a more conservative profile.
Out of the growth opportunities available in emerging markets at large BRICS, other South Asian markets, some of the African ones, how does India stack up in comparison? Has India slipped some notches from the stack?
When it comes to growth potential, it's still relatively strong. India has a fast-growing population, which provides an additional boost to the potential rate at which the economy can expand. But it's true that it's not the fastest growing one. China, for example, will continue to outperform it. There is some smaller economies in the emerging market world which are worth looking at as well, such as Turkey, for example, a big success story in the past several years. And relative to them, India doesn't look as good as it used to 5 years ago.
How do you read into the impact of the subsidy burden on fiscal deficit, and would India be able to meet its fiscal deficit target for FY13?
I don't think so. It's highly unlikely. I think that there will be fiscal slippage. It's partly because of those subsidies, but also partly because basically revenue cannot meet targets, given that the economy is going to expand much slower than the government had planned. So the deficit will be above targets, it will remain wide, and it will be one of the reasons why investors will continue to tread cautiously when it comes to India.
Right. What is your future outlook on fiscal deficit and government borrowing program, and how are the rising crude oil prices posing risk to them?
Well, oil prices and food prices are posing a major risk to that. generally speaking, I think that until 2014, where the next election comes, we are going to deal with a high level of budget deficit because the government will not want to pull back any of the programs that are supported by its voters. So unfortunately, fiscal consolidation is unlikely to see any major progress over the next 2 years.
The rupee has been on a volatile front, really, against the dollar. Views seem split as to where it is likely to head from these levels. So, what do you think?
The currency has indeed been very volatile because it's highly dependent on the global market sentiment, which itself is volatile due to the Eurozone situation. Basically, India relies on portfolio flows to fund its current account deficit, and if you rely on those flows in an uncertain global environment, you have to see large moves in the currency depending on the sentiment in a given day in global markets. So it's not just India's fault, but the fact that it has to rely on those external flows is its responsibility. So, 58, is it possible? It is possible. Are we going to see it? Maybe in the very short term, but I think that the direction overall is going to be towards gradual strengthening of the currency, because the weak fundamentals that everybody is focusing on are already largely priced in, and there has been significant depreciation in trade-weighted terms, which sooner or later will allow exports to recover. So we think that it's more likely that the direction will be towards 52, and we should get there by the end of this calendar year, and if not, then by the end of this fiscal year.
With the factors you mentioned, do you expect the RBI to adopt a hawkish or a dovish stance in its September policy?
Well, it seems that over the past few years, inflation has taken precedence over growth in the RBI thinking. I think that they would like to cut rates a little bit to help growth, because growth has been very disappointing, and the recent metrics such as exports, industrial production, and even business sentiment are quite weak. Given how high inflation is, it's really a 50-50 call whether they will cut in September or not. We are betting that they will make a small move because the new finance minister has a lot of goodwill behind him, given his strong credentials, and the central bank may bet that he will make changes to the fiscal outlook that will allow easier monetary policy. So I think that they will cut rates in September by 25 basis points, but there's only a, let's say, 60% chance of that. There is a good likelihood as well that they will actually delay that to see whether inflation does come down. And even if they move by 25 basis points, it's not a lot. Rates will remain high, and there will be an impediment to growth.
All right, Darius, we leave it at that. Thanks very much for joining us and giving us that perspective on the market. We'll take a break right now. When we come back, get you a quick update on the NSM stock list.